Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, September 17th, 2018. Here we are, my lovely friends, on a Monday, once again, trying to make sense of the insanity that is this market and the world that we live in. Well, let's talk about that a little bit. Let's start off with the basics. As I am doing this video blog, stocks are under pressure a little bit. I mean, we're almost at the flat line. There's a reason for that I want to talk about in a moment. Gold and silver are catching a bid here. Cryptocurrencies are under a little bit of pressure. Now, if you happen to see the video that I did yesterday, Sunday, my Markets A Look Ahead segment, I explained to you pretty clearly that we needed to watch three things. Well, some of that is unfolding in a way that doesn't look so good here, and that's putting a little bit of pressure on stocks. It's affecting the bond market, so let's talk about it. Trade war rhetoric is getting worse, not better, like I've been explaining. We haven't even started yet with regard to where these trade wars are going to go moving forward. Trump is still making his threats that he's going to institute more tariffs. Again, he's waiting for it to be priced into the market before he does anything. He does not want the stock market to react in an overly negative way. China came out promising to retaliate. So again, you can see where this is going. Now, it's having a kind of interesting effect here. The number one thing that's going on here is the U.S. 10-year yield, as I am doing this, is above 3%. So we're moving a little bit out of that sweet spot, which I outlined for you in the video yesterday. They needed to keep it in there. The reason why stocks, in my opinion, are not reacting in a very negative way as we move over 3 is the dollar. The dollar is the story once again. It's getting hammered and beaten down hardcore right now. So there is that compensatory mechanism that I've explained to you for so long, and right here you can see it in action. Dollar is getting killed, and although the 10-year yield is moving up, there is kind of that compensatory mechanism for the market. It says, well, the dollar is getting slaughtered, so maybe we can deal with it, but we need to keep our eye on these things. It's so important. We found out something else today. It just came out. The Empire State Manufacturing Index, maybe you should sit down for this one, fell off of a cliff. The reading in the previous month was 25.6. We dropped to 19. Economists were expecting a number of 23. I mean, this is a huge miss. Huge. They must have not gotten the memo, people, about this being as good as it gets or an economic boom. And with regard to this number, if these trade wars get worse, which they will, you can expect that number to also suffer. You understand? But you're also going to hear more propaganda, more lies about how great everything is here. This manufacturing number, how many of you believe, with the show of hands, get your hand down, that President Trump is going to go out touting this all day long? You will not hear a word. Zero. That's just the way it is. It's the look here, don't look here. Same story, doesn't matter who sits in that pretty White House, you know that. So that's the story here, people. The bond market is in a little bit of trouble right here. The dollar is getting hammered. And we'll see how that plays out. We'll see how the trade war rhetoric escalates as well. If and when we get this announcement of another $200 billion in tariffs, we'll see how the market reacts to that. And it's just very, very interesting. And this manufacturing deal, I don't know, doesn't look good to me, but everyone is looking in the wrong spot. I think people are really brainwashed right now. They really honestly believe what's coming out of the mouth of not just our president and everybody else, but the mainstream, especially the mainstream financial channels, the cheerleaders. They are pushing the narrative. This is, our economy is as good as it's ever been, blah, 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 and it's just not true. American citizens are, in fact, in more debt than they have ever been. We're in more debt today than we were yesterday, so this must be better, right? Unbelievable. Yeah, well, corporate America, it's the best that they've ever seen. There's no doubt about it. Never, ever in the history of this planet, truly, has corporate America gotten so rich so fast in such a short period of time, while we, the American people, have never gotten buried under more debt in such a short period of time, and it's only going to get worse. Why is it going to get worse? You remember last month here we found out government outlays, the highest on record, more government spending than we have ever seen, almost $500 billion, and that's not going to be the last time that's going to happen. You owe that cash. How do you feel about that? Well, I don't know. I don't like it. And again, our president promised to fix it, making it much worse, making it much, much worse. And he can't stop, especially with escalating trade wars. He has to keep it going, has to keep piling on the debt, bringing that Federal Reserve right to the top of that pyramid, doing everything he can in his power to keep cash flowing into the stock market, to keep the illusion real. Anyway, with that said, we will sum this up at the end of the day, my lovelies. See you then.